Good afternoon, everyone. This is Brad Matheny. Today is the 18th of September, and this after market video of the Fed day today is really to try to teach you a little bit more about how I see the markets and possibly how you can start learning from me to become a little bit more skilled trader overall. Now, remember, I've been, developing trading systems and helping people really as a consultant for years, building fully automated trading systems and quantitative modeling systems for, good 25 plus years. How did I start doing this? I got lucky and I started writing a pattern recognition system called the Japanese Candlestick Forecaster years ago, back in 1989. And it became kind of popular. And that got me into this field back when candlesticks were brand new. And from there, I've been learning and sucking up as much information as I can. So, think about it. It's 2024. I started in 1990, let's call it. That's a good 35 years ago that I started rubbing shoulders with some of the best traders on the planet back, before computers really took over. But what I'm going to teach you right now is the one theory that I believe holds true to everything, which is Fibonacci Price Theory. Price must always attempt to make new highs, new higher highs, or new lower lows. Always. Price is always trending. It never really goes flat. It's always trending. Failure to make a new high means price must attempt to make a new low. And again, failure to make a new low means price must attempt to make a new high. Okay, it's pretty simple. The reality of the situation is price is either trying to make new highs, and of course it's the daily chart, so it doesn't look very clear, or it's trying to make new lows, which would be seen as a series of lower lows and lower high or higher highs, lower lows, lower highs in a downtrend, higher highs, higher highs, higher lows in an uptrend. That's essentially what happens in trending. Now, in the case that we get consolidation where it goes like this, what's going to happen is you're going to get a high level, a low level. It'll attempt to make a high and then fail. It never got above this one. It'll attempt to make a new low. It'll fail. It'll attempt to make a new high. It'll fail. It'll attempt to make a new low. It'll fail. And then eventually it will become successful to the upside, breaking above the highs and lows. Now, failure in this case to make a new high of this point means it must attempt to then come down and make a new low. Failure, meaning once we get reversal here, means it must attempt to come up and take out this high. Failure to do so means it'll roll back down to the downside. So remember, failure in this case is really a key factor. So it really comes down to the fact, I'll clear everything here. Oh, I didn't want to do that. Okay. Get rid of these lines. Sorry, guys. Hang with me. It really comes down to the fact that we have success and failure. Okay. Whoops. And that we have success or failure. Success is the market's, let's call it the price, does what we expect related to the pattern, setup, expectation. Or failure, the price does not do what we expect related to the pattern, setup, expectation. So you're really boiling it down to these two outcomes here, okay? Is it moving higher? Is it doing what we expect? Yes, then success. We have success in the actual trade setup and our expectations. Or B, we have failure. Now, if you cannot determine success or failure, then you have uncertainty. And that means wait for clarity. Okay, that's what uncertainty means. So, what I wanted to highlight with you today was this. We're going through the daily chart and we're going to try to look up. Let's come over here and over here. And we're going to try to look up the higher high points. So you can see as we're coming across here, we're coming up higher high, higher high, higher low, higher high, higher low, higher high, lower high, or lower low. Oh, okay. This is odd, right? That means that we're what? What are we getting? We're getting rotation. We'd seen the lower low, and that's why Japanese candlesticks are so important. We get the lower low. We see the close is a little bit higher. We get the higher high. This means we were able to attempt to move higher in this area, but we were also attempting to take out a low. So this sets up now a range where you can see the following day we move up, we set up a higher high, we open higher, and then we break down lower, but we fail to take out this lower low. Okay, well, this lower low here sets our range. Now we have a range that we can set up and say that this level becomes the low that we want to try to watch for a breakdown. And as we come up and we set up this high, we can come up and set this unique high or standout high. This is actually a unique high. We can turn around and say that's going to be our high that we're going to look to see if we can get above. So we really have resistance up in this area and support down here in this area. And this now becomes our breakaway range. Price must always attempt to make a new high or a new low, always. Now, within this range, you can see that we've identified this rotation, these high and low ranges. And as soon as we either break above this level or this level, we would actually get a new trend trigger. So we are bullish at this point. We're moving higher. We're bullish all the way over here, giving us a pretty clean indication that we're trending upward. And now we get here, this breakdown, that tells us now that we're trending downward. And we would want to look for new high or new low levels. So now as we're coming down, we get this nice little high that sets up here. Notice that we broke down, lower low, lower high, looks like a lower low, barely, lower low, lower high, lower low, lower high, lower low, sorry, lower high, higher low, an inside pattern, a Harami pattern. Guess what? That gives us an indication that we're weakening a bit. Now we get the higher low. Okay, higher lows, higher highs. Higher highs go against the downward cycle trend. We must be establishing new lower lows and lower highs in a downtrend. This candle right here sets up a potential breakaway or a potential variant type pattern, let's call it, which would send alarms to me. I would be going, hey, look out, this is a potential reversal. Same thing happened back over here on that candle. We had a reversal of trend. And you can see we come here, reverse, and then we reverse back up, then reverse back down, higher high, no lower low. Finally, we get a lower low here. So you see how we're getting this rotation up, and then we get this breakdown, rotation down, up, rotating up, down, rotating down. To me, it's clear. We get this rejection. We come up, we reject, we fail. We're still in an uptrend. We reject again. Now we get the lower low on this pattern, lower high. We're kind of in a downtrend here until it proves us differently. Downtrend with a higher high. Okay, now we're getting a potential for an upward counter trend reversion. Here's our upward counter trend reversion. Here's our low here. It's still in the time frame. Then we get this big breaking pattern. Tells us that we have now broken to the downside. Now, as we come back over here, we get this little guy setting up. We get a lower low. We get a higher high right here. This is kind of a breakaway pattern telling us that we're checking out these lower channels here. So I'm going to copy this, bring this down to here, and I'm going to copy this, and bring this down to the top of this candle right here. And what we're looking at here, guys, is really kind of a setup where we have this low as our new lowest low, which is what we would call our unique low. It's not an ultimate low because it wasn't the lowest low we've had in 40, 45 bars, but it is the lowest low we've had in 15, 20 bars. So that makes it a unique bar. When we have a high like this that has been touched recently, this makes it kind of a standout high. So you can see as we get above this, and you can see how we opened here. We had the rotation early in the morning. If you remember, this bar was down very hard in the morning and rolled all the way up through the afternoon. This was a beautiful reversal. It failed to make a new, I mean, it did make a new low here, but failed to take out this low. If it fails to take out a new low, it must attempt to make out a new high. So here we go. Now we're rolling up here. Now let's pay attention to this one before I run out of time. And we are establishing up here a higher high, higher low, higher high, higher low. So at this point, we don't have any real quote unquote concern of a unique pattern. Remember how I mentioned to you here how this was unique because it had a higher low, and this was unique because it changed direction. We don't have actual change direction yet here. What we do have with the highs and the lows, what we do have is what's called the belt line change of direction. Going back to Japanese candlestick terms, the belt line is the midpoint of the candle. And draw one there. And then I'll drag one down here. So if you look at the midpoint of these candles, based on the high and low range, they're still technically moving higher. You can see how I've drawn them here is the midpoint of this one right about there, and the midpoint of this one right about here. But if you go to the midpoint of the bodies, which are the battle between the, think of it as the front line of the candles, now we have a downward trending scenario, counter to the upward trend. And I would argue that when you have a downward trending mode like this, you could be in early consolidation, kind of like this. And again, try to teach you how this works. So draw the midpoint of the bodies here, right? Midpoint of the body. Again, this is called the belt line in Japanese candlesticks. It is, you know, it is fairly common knowledge. I'm sure many of you have probably heard this before, but the belt line is where the Japanese believe equilibrium is. It refers to the sumo wrestlers being able to control their opponent by grabbing a hold of the belt line of a sumo wrestler, which remember, they're not wearing many clothes to begin with, continues to drive their balance. So if you control their belt line, you control their balance. And if you control their balance, you can win the bout by throwing them out of the ring. So in this scenario, when the belt line shifts from one direction to another, just like we saw right here with this rotation, you may be moving into early rotation of trend. So we have a belt line lowering here where it had been moving up all the way through this channeling. It lowered here and then rotated up and then rotated up and then down and then about the same, down a little further and then about here and then up and then rotated much further down here and then ended up in a downtrend. Here we have the same type of rotation here. So this may be a pretty big rotational top setting up right in this area. We're getting early warning signs that we're not getting the continued trending. Now, again, I'll add that if we got another bar and the belt line was back up here, hypothetically, or higher, a big breakaway bar to the upside, yeah, it'd make me feel a lot more comfortable. We'd be back up in an uptrend. We would be trending in the predominant direction given this high with the Fibonacci price theory, but we don't have that yet. So now what I was going to try to do with this before I kind of got sidetracked I'm trying to give you guys insight on what to see in the charts. Because we have this rotation, we have this lower belt line, I'm falling into the uncertainty category here. I'm falling into this, hey, I don't exactly know that the markets are going to continue to punt higher or lower at this point. I need direction. We have an uptrend. We're in a clear uptrend. We need to get above these levels to try to push up higher. We are getting these higher highs. And if I come back and I look at the ultimate high, meaning the highest high that I've seen that has more than 45 bars of untouched data to the left of it, nothing has touched this for 45 bars or longer. That makes this the ultimate high. And that makes this a real key target area for price. Now, coming back over here, an ultimate low is going to be something that has not been touched in the last 45 bars. Let's just do a quick count. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21, 22, 23, 24, 25, 6, 27, 28, 29, 30, 31, 32, 33, 34, 35, 36, 37, 38, 39, 40, 41, 42, 43, 44, and almost 45 bars right there. Okay, 45 plus bars going back. That makes this the ultimate low. And now the ultimate low gives us the ability to determine that price must attempt to break below this level if it's going to attempt to make any major downward trend, and it must attempt to get above this level if it's going to attempt any major upward price swing. Now, these are the ultimate levels. The unique levels are prices that have not been touched in the last 15 or 20 bars. I highlighted this one already, is our unique level, our unique low, and this over here, or sorry, that's our unique high, and this is our unique low. So this gives us a boundary between here and here that tells us price must move above this level, both of these levels to try to break out to the upside, and it must move below this level to try to make a move down to this level, which would ultimately attempt to make a move even further down to this level here. So Fibonacci price theory teaches us all of this. The highs and lows are critically important to be able to do all of this. So now that we've mapped all of this out, what I wanted to do at the beginning of this was have a little fun. Let's go down to a 2-hour chart. Take a look at the same data. Are we getting higher highs, higher lows? Where are our belt lines? What do we see? Take a look at this, guys. We're moving up. We're moving up. We see a little rotation, a little minor low here, rolling up, big gap up in this area with rejection, running into another little low here, and then a low back over here at the close of trading today. Well, okay, I'm going to go ahead and mark this level here, make it a blue color, and make it a 2. And then I'm going to also mark this level here as a low, which is a dual low. You can see we've tapped it here and here. Other than that, we have very clear rejection up at this area, meaning price tried to get above this area and failed. Okay, let's come down to a 1-hour chart. Do those lows and rotations still hold up? Follow along here. We're looking at these lows. We get this gap. I'll take a look at this gap. Highlight this move here as a gap pattern. And we'll just carry it all the way out. And do we still have those lows? Yes. We even have another intermediate low right here. Okay, so I will highlight that. Sorry, move too far to the left. The Windows screen comes up. So there's our intermediate low level. Now we do have this little high level right here. I'm going to just leave that on this candle. It's right at my red line. And again, you can see here the ultimate level. Price got above it and then rejected, got above it, rejected again. I can map these two highs. I can draw lines across them. They're valid, but it's indicating that if price can get above this red level right here, on an end of day close and strongly confirm up in this 568 area, we're probably going to move higher. But right now we're getting this downward cycle trend, like I said, that has me concerned. And I'm looking for levels here that I want to see, if we can find any identifying points to qualify this. So now we still have the earlier points. You can see here, this low here was kind of double tapped here. Coming across here, you can see the rejection. This is actually got to move up just a bit. Rejection in this level, moving down. I mean, ultimately, these levels, as we're learning, and there are literally thousands of them on this chart, are extendable out to the right, showing us that, hey, we have got real Fibonacci price data that dissects this entire chart. I mean, if you look at this, this is just using Fibonacci price theory, and we are dissecting the entire chart. We're tearing it apart. Okay, we even have a little gap right here. Let's go ahead and mark that. That's going to be important. Tiny little gap right here. And we have this gap right here that's already filled. So what is happening here, folks, is that we're getting this rejection. We could go either way. I'm going to go down one more. I'll go down to 30-minute. We could go either way, but ultimately this area now becomes what's called secondary confirmation. We also have this rejection low. This is a unique low. It's not a unique, sorry, a standout low, but it does, you can see we've come up, come up, come up, and then here's that low. So in essence, I would try to draw from here and keep an eye on this low as well. So we're looking at an area here, really in this area. If you want to know what's going to confirm a downtrend, it's probably going to be a move down below the 554.90 to 556.50. Somewhere in this area is going to confirm a downward breakdown. We're going to have broken through enough support that I would say, yeah, we're likely on our way down to this lower low level. Whereas if we get above this level here, that's going to be with a strong close. That's going to be our buy, our resumption of a buy trigger. Now we are currently in a bullish trending mode. So I don't have to kind of be resumption of buy. We're in a bullish trend. We have been in an upward trend for quite a while. I do expect it to roll over based on the excess phase peak pattern, but we're in an upward trend already. I would be concerned about a move down here, potentially, didn't mean to bring out that thing, potentially rolling across, moving down, finding support, then potentially moving up, or potentially moving back down to fill these gaps. Remember, we have these two gaps that we can still technically roll through. They've been filled already, but they are gapping price areas that become, they are still valid. They are still gaps that essentially have been filled, but I do map them as valid price territories for support and resistance. You see how this was tagged multiple times. This area was tagged here. We could end up finding support very easily right in this area. Just like we have this little gap right here, we could end up finding support again right across here. Watch how cleanly this plays out. Gee, look, our gap area is right across our lows right now. Wonder why that is. I don't know. It acts as killer support. It really does. And here's another gap area. And notice how it plays right into this low right here, right into this rotation, right into these lows, right into our stalling pattern here. So remember, gaps play a very important role. Everything dissects the chart. So now we come back down here to 30-minute. And what do we have? Do we have any unique highs and lows in here? We've already kind of mapped them. Got a unique low right here, which we're already below. I'll mark it right here. And we've got another little gap right here. And there we go. I think we've dissected it all the way down from daily to 30-minute. We are still essentially in an uptrend. I've got about a 30-40% chance right now that we're going to roll. Well, let me put it this way. Until we get above this upper level, we have a higher probability of a pullback right now. So I'd say we got a 60% chance of a pullback, about a 40% chance of an upward rally. That's just because of this excess phase peak pattern that I keep talking to you guys about. So let me show you what an excess phase peak pattern is. An excess phase peak pattern is basically, it starts like this. Let me draw it. It rallies up, forms a top, rolls back down, forms a base, sets up a flagging formation like this. Now, ideally, we have to stay below this low or below this high with this flag. Price will then roll out of that flag, come back down and try to test this immediate low, and normally break down, set up a new low, find support, roll sideways, and then break downward after breaking through here. This sets up the number 1, number 2 flagging, number 3 breakdown of flag, number 4 establishing new low, and then I'm doing these wrong, and then the ultimate low here, number 5. So essentially you have the 4, the breakdown, the establishing, and the breakdown here. So this is basically 2, 3, the establishing of support. So this is the flag breakdown, the establishing of support, which can either be here or here, wherever. You can either be at this level or new lower low level. Then you have the rotation. Then you have the breakdown of that rotation, establishing the ultimate low here. That's a complete, perfect excess phase peak pattern. Now, it can end at any point. It can end here and go higher. It can end here and go higher. It can end here and go higher. It can end at any point and go higher. So when we look at these, look, here's our excess phase peak. It comes across, it peaks, it flags. We roll down, we fail to break this level, we roll higher. Okay, there's hundreds of them here, guys. It comes up, it flags, it breaks higher. Okay, it comes up, it flags, it breaks higher. Literally, there are hundreds of them. It comes up, it flags, it stalls, it breaks down, breaks to a new low, rolls around, breaks down, hits the ultimate low. That's a number 5. That's a completed excess phase peak. It did it perfectly. Peaked, pulled back, flagged, broke down to a new low. Number 3 is right here. Rolled around a bit. That's this area here. Broke down to an ultimate low here, which is a number 5. So now here we have the same thing on a big, broader picture. Peak, up, flag, and a breakdown. Then it turned into a secondary peak, pullback, flag here, and that is our secondary excess phase peak pattern. So right now we have a dual excess phase peak pattern that is playing out. We have this first one here coming up. We have a second one here rolling to this time frame. If it confirms, it'll roll to this one. That's be the shorter light blue one. This one will roll down to here and attempt to move lower. If that happens, it could be also confirming the bigger one, which should roll down to here and roll downward as well. So remember, these are patterns that are playing out that are in place, and they play into Fibonacci price theory. So remember, all of this is all in line with Fibonacci price theory. Okay, I've done 29 minutes. I'm running out of time. I hope you can understand this. I hope you get the feel for what I'm trying to tell you. And maybe I'll try to do another one a little later. But this is the key element, key constructs and components of every price chart, of everything that I do. It falls down to this is the basics. Okay. Hope it helps. Talk to you later.